David Morgan from the Morgan Report in the Investment Pitch Studios in Vancouver, British Columbia. Bob Wares is with me from NioGold. Well, Bob, let's get the NioGold story. First of all, where are you located?
Our main project is located in the Abitibi Gold Belt in Quebec, just north of the highway and just 10 kilometers away from Canadian Malartic Mine.
Well, most of our viewers probably know, but Quebec's pretty favorable to the gold mining industry, aren't they?
Oh, absolutely. Favorable tax regime, politically stable, and it's still a premier area for mine development.
And you are near one of the best known mines in the area for mining low grade and making a profit at it, right?
Yeah, well, we developed it certainly when I was at Osisko, and of course Osisko was sold to Agnico and Yamana this year. So it's a very profitable mine. Cash costs are less than $600 an ounce, and all that with 1 gram gold. But it's all about bulk tonnage and economy of scale.
And to play the devil's advocate for a while, I mean, it's tough. A lot of times 1 gram gold doesn't work, but in this case, obviously it does. It's a profitable mine. You're located in the same vicinity, and you're basically, I guess, in the sweet spot being in Quebec and near a mine that's already there, and you've already got infrastructure facilities. So why don't you take us through that scenario, where you are and how it works and why it works?
Well, basically, right now, this year we'll be defining resources, more quantified resources on the Marban deposit, which is our main asset. At this stage, it stands at about 1.3 million ounces, 1.2 grams per ton. And the objective this year is to upgrade the entire resource base on the deposit to measured and indicated, and then remodel the pit shell in order to convert it to reserves. Hopefully by I would say Q4 2015 or Q1 2016. And the reason this is a project at such low grade is because we're just 12 kilometers away from the Canadian Malartic mill.
So there's not much transportation costs there.
No.
I'll let you continue, so I didn't mean to cut you off, but
yeah.
It's more to the story, I know. But energy plays a great deal into these type of situations. So the lower energy costs, that's kind of a bonus to you, correct?
Well, certainly we wouldn't have to build a mill in our case. The mill's already there, so we're just talking about really diesel costs for the trucking fleet and so on in the eventual pit. So, but we're also talking about a very low capex operation. We just have to mine it and no mill to build. So that's the objective really is we'll have several options once we've defined the reserves, either a toll milling at Canadian Malartic, sell the deposit to Canadian Malartic mines. And we're looking at a third option right now, which is interesting. Hasn't been done in the Abitibi yet. That would be a heap leach operation. I've had a good look at the ore. It's actually fairly fractured, and it's possible that it'll be amenable to heap leach. It's a question of porosity. So in the first quarter, we'll be doing column leach tests to establish whether the ore is amenable to heap leach, and if it is, that'll be a game changer, because that would mean we could potentially put the deposit in production ourselves as a heap leach operation, and not have to rely on the Canadian Malartic mill.
Well, let's take it a little further on the investor perspective and look at shares outstanding, who holds it, how much management owns, and look at that side of things. So what is the share structure? What's the fully diluted?
Well, it's just over 120 million shares outstanding. Fully diluted, we're at 128 million. Osisko Gold Royalties right now holds about 19.5%. And insiders hold another 2 or 3%, so we have a good solid block there. Most of the rest of the shares are retail. We don't have an institutional base as yet, but that's something we're going to be working on this year to bring in institutional investors as the project evolves into a development story.
Well, if you hit your milestones at the end of this year and you get the quantity that you're looking for, would that be more likely a buyout candidate, or would it be more likely just held by the current shareholder base?
Well, certainly, well, the buyout candidate, the most likely buyout candidate would be Canadian Malartic Mines. Mm-hmm. We believe we can have a product at the end that's going to be very interesting to Canadian Malartic. especially if the grade is 30% higher than what they're mining. Canadian Malartic's mining 1 gram. We're hoping to have an average grade of 1.3. And 0.3 grams may seem very little, but on a bulk tonnage scale, you're still talking about a 30% increase in grade, which is huge.
Sure.
When you're producing at such a large scale.
Very good. Well, we looked at, why don't we talk about management for a while? I mean, you've got quite a background. Why don't you go ahead and tell us about your background for those that don't know you that well?
My background, I'm a geologist by training. I'm co-founder of a Cisco exploration, which eventually became Cisco Mining when Sean Rusin and John Brzezinski joined the company. And it was essentially a large part of my work that led to the discovery of Canadian Malartic, because when Sean and John joined the company, the focus was to find a bulk tonnage deposit in Canada, specifically in the Abitibi. We did a fair number of projects. We even went as far as Brazil in the first year, but came back to Quebec and took a hard look at the geology and theorized that there would be potential for bulk tonnage systems. And after doing our compilation research, when the old Canadian Malartic mine just basically showed up as a big red flag. And at the time, it was actually owned by a defunct company, McWaters Mining. Mm-hmm. Bankruptcy trustee owned it and was looking to sell the asset. So our timing was perfect. It was in late 2004. Once we identified the target, we were able to pick it up for $80,000. And eventually it became a 13 million ounce gold discovery. So that was a great success based on a geological model, and we were able to bring in a whole team to finance the project. Eventually, the Cambior team, the technical team, engineering team, to put the mine into production. And of course, we were sailing away very nicely on a de-risked mine, producing mine, when Gold Corp launched a hostile on us. In fact, a year ago, almost to the day. And then eventually we were able to bring in Agnico and Yamana to buy out the mine. So now, of course, as you probably know, we formed a Cisco Gold Royalties with a good solid cash base, 5% royalty on Canadian Malartic, which is going to guarantee steady cash flow for the next 15 years. We just recently merged with Virginia Gold Mines to bring in the Eleanor royalty. And so now what we want to do is, our business model is essentially to create resources, reserves, and develop these projects into production and retain the royalty, which is what we're doing with NioGold. So it's an exciting story. We're confident that NioGold is going to be a winner because the Marban deposit is a very solid asset. I haven't taken a close look at the other deposits on the property. North Arctic Cairns, I'll be doing that later this year, but right now the focus is a 40,000 meter program to bring those resources up to measured indicated.
Very good. Well, I think we covered management. I think we covered finances, at least briefly. Certainly the deposit and why it works. Is there anything I haven't asked you that we need the viewers to know?
At this point, no, I think that pretty much covers it. The strategy also, in the current market, we do believe that gold is going to turn around this year. And I think 2016 specifically is going to be a very exciting year for gold. And so the strategy is to position NioGold to have a solid reserve as a solid asset in an improving gold market. And I think it's going to put NioGold ahead of the game compared to a lot of other companies. So that's why we'll be focused entirely on resource development this year. And we're going to sacrifice our exploration program. It's going to be put on hold, but we're certainly going to be going back to exploration 2016 because there's still a lot of potential on this property within a stone's throw of a world-class mine.
Right. Well, congratulations on your success already, and I wish you continued success, Bob, with NioGold.
Thank you very much.